Hi, it's Graham Bibby here on the 26th of October 2015, and I've got a pumped up presentation for you today. I'm so pleased because just over a week ago I was telling you that I thought Asia has broken out to the upside, and I was getting buy signals across virtually all of my services. Now, those of you who are in the Insiders Club Undervalued Superior Earnings, this is two additional services, which one uses ETFs, exchange traded funds, so we can access 46 different countries and all the various sectors of the US, and also we can access commodities and currencies. This is a service where I outperformed the markets from 2002 to 2010 by 10 times. The Morgan Stanley World Index and the average managed fund went up 37% that time, and I went up 392%, or you would have if you followed my signals. So if you're not in that service, it's not been a great service over the last year and a half because Asia has been finding life difficult and sectors have been finding life difficult, and there was more opportunities, although still quite difficult, in undervalued superior earnings. But right now I've got brand new buy signals, and the upside from where we were just 6, 7, 8 months ago is 30 to 40%. In special situations, I have unbelievable opportunities because I've got stocks down there that are down 95%, 90%, and even up to 99%. So it's 3 different services. If you're not in them and you'd like to get in them, please drop me an email or give me a number and I'll give you a call and we can have a chat about it. So here we are. This is the Standard & Poor's 500. Unfortunately, when we broke out here, which was the first buy back into the market decided that it needed to sell off again and test this support level, which can happen. And now what is happening is what I thought was going to happen here. So my analysis was perfect, but the timing was a little bit out. So we needed to exit because you don't know when this bottom is not going to hold and we're going to go lower. So for me, caution is the buy word, and now it looks like we're in the driving seat to make some serious profits. So here is, let's go across to Asia. This is Asia. This is what's been happening since last April. Boom! Climatic sell-off here. Rise. Fall. Buyers coming in this level, not going to this level. A rise above. This is the breakout where I saw stocks breaking out in September. It tested back but didn't get to the lows, way off the lows. Buying came in, and then bam, we went through that previous high. Buying came in, and this is where I started to take positions. Fully invested in my fund optimization service, and we're just going from strength to strength. So it looks to me as we're above this 40-day moving average, and now the 60-day moving average is, hey, we're in a new bull run. And China. Now, I wouldn't have thought this, but you know, the trend is your friend. No emotion, no ego. This is China. We had a nice run in the fund optimization service when the breakout came here in July of 2014 and 28, and the sell at 65 before this carnage happened. We've now had another buy signal back in here, just around here, and we're in a brand new uptrend. Okay, we have a 60-day moving average above us, but given the strength of the other markets, I think we're going to break through that, and it looks to me as if China's in a brand new bull trend. Also bought this one, which is the China small cap stocks. Excuse me. Again, it's above this moving average, which is now turned up. It's got a bit of pressure here because that one's above it, but it's looking very, very good. Hong Kong following suit. We're in that. We're also in a few other Asian markets which are leading the way. This is the Philippines. We also, because we can do this in exchange traded funds, we're also in the semiconductor sector, and that's what happened to it from June to August. We went in this just about a week ago. That's looking magnificent. So semiconductors are moving. That's not been a great place to be, but it looks like it is now. Special situations. We got into this. Gold and silver looks to me as if they're in a brand new uptrend. And it's probably because now Europe's going to be doing quantitative easing. I guess China's going to be doing more quantitative easing. And look where these stocks have come from. This stock, just in 2011, was $23, and we picked it up below $2. That is a tenfold increase if it were to go back to that level. But brand new bull market, the risk rewards right, so we're happy with it. In the undervalued superior earnings, here just over 110, Went back into Apple. It's 119, looking great. That's breaking above this. I guess that's in a brand new bull market now. Even copper, I'm looking at that very closely. Copper, you see this? This is the climatic sell-off. This is the breakout that I saw across everything in September. This is very reminiscent of 2009 after the global financial crisis, when I saw more and more markets breaking to the upside, which is why I screamed it was the buying opportunity of a lifetime. We had the sell-off here. We bought in at a higher level than this, and then bam, we've gone above that height. This looks like the bottom's in place. We're even above the 60-day moving average. If these turn up, that would be telling me that copper is on the way up, and that's down significantly. And if you're going to play any of these metals, you need to know which stocks to buy or which ETFs to buy, because they'll seriously outperform the physical. They're almost a geared version of the physical. One of my what I call Chinese favorites. This is Starbucks. We're back in it. It's a brand new high. It had a huge sell-off in August. This is how irrational and difficult the markets have been this year. This went from, in a space of 3 days, 57 to 41. That is huge. But then we stabilized. We had that sell-off again in September, which caused us to get out of everything. But we're now in a very strong new uptrend. So many things looking great. In my special situations, I've got so many great stocks. This is a more stable one, but it's a biotech. It's in an uptrend, and I've got some stocks in there which I'm buying, which were $100, and that sector and those stocks, good companies, have gone down below $1. So we're picking some of those up. If it goes back to just $10, that's 10 times, and it's still 90% down. And if it goes back to where it was before, we're talking about 100 times. Aussie market looks like it's given a new buy signal, as does the Australian dollar. Australian dollar looks interesting, which correlates perfectly with what I'm seeing in commodities, with what I'm seeing in emerging markets, and even dear old Europe seems to be coming to life. This is Germany. This is the rise here. Nowhere to get into this. This is just a one-way trend at the moment. But even selected European markets. But to access that sort of stuff, you need to open up a separate account, which is fund optimization, and that gives you diversification. So ideally, if you've got the right amount of money, you have the core of your money in undervalued superior earnings. You have another smaller amount in fund optimization and a smaller amount in special situations. So this is Graham Bibby on the 26th of the 10th, 2015, saying, well, much better week. The traffic light system is green. So if you haven't got your money invested, get it invested. And if you have additional money, this is a great time to add, because we've just had all these sell-offs in the last 4 months. So the best time to invest is after a decline, because the downside is limited and the upside potential is much greater. Okay, speak to you later in the week. Graham Bibby, over and out.